We are back with calls of the day. Number one, Ferrari. Target gets bump robbed to a street high $520 from $400. That's Adam Jonas over at Morgan Stanley. Overweight. They've re-rated the PE multiple to 50 times earnings. Visibility high, volatility low. China risk, outlier low in luxury. What do you think?
It's interesting. It's up 45% year to date. It's the only European automaker to raise guidance this past quarter. Shows there's value in the ultra luxury segment. It's more resilient than people think, shockingly. They have incredible brand strength and software-like profitability. When you look at their customers, this is a real structural advantage. 74% of them are repeat customers. And you look back to the financial crisis, and this is absolutely crazy. They were free cash flow positive during the financial crisis, which is pretty interesting.
Cleveland Cliffs. I haven't talked about that in a minute. Upgraded to buy, and that's from neutral. Seaport. Price target, Jimmy, $16.50. See where it's trading now. Based on a tactical call around current steel price cycle and the mounting supply side response.
Yeah, and thanks, Scott, for bringing this up, because I know sometimes people wonder about it because I haven't talked about it in a little bit. The company is absolutely fine. The reason that the share price has gone down this year is because steel prices have gone down by about 40%. However, there are clear signs that the bottom is in as far as steel prices goes. Cleveland Cliffs itself has raised the selling price of hot rolled coil. In addition to the tactical call that this analyst is making, he's not talking about the fact that Cleveland Cliffs is buying a company, Stelco, at the bottom, which is exactly what you want to do if you're good management. You want to buy good assets at a cyclical trough so you can have more of an upswing when that happens, and it looks like it's happening right now. Just real quick note on this. They're taking out debt at 7% cost of capital to buy Stelco. Stelco and Cleveland Cliffs together is going to have an EBITDA yield somewhere around 15 to 20%. That's a home run.
You thinking about U.S. Steel at all? And what's going to happen there?
Yeah.
And what this company's role, if any, may be in the future of steel deal making?
Yeah, well, look, it does. I'm hearing headlines. You're hearing them as well, probably, Scott, that the U.S. Steel, Nippon Steel deal looks like it's going to go bust. I don't really have a comment on that, but I will say this. Cleveland Cliffs has clearly made its play with Stelco. First off, Lorenzo Gonçalves has been clear he's not coming back for U.S. Steel at the same price he offered. I mean, he's a little ticked off. I don't blame him. He may try to pick off some pieces if the deal falls apart, but, there are balance sheet limits as well as market share limits for antitrust. So I don't think buying U.S. Steel is really in the cards as a whole, but maybe picking off pieces. We'll see.
Let's go Carlyle Group now. Initiated Josh buy at Redburn. That's along with Apollo and KKR. The price target for Carlyle is 55. Screened strongly on valuation. That's what we're showing you on the screen because that's what they say in their note. What do you think?
Yeah, so Carlyle had a little bit of like a leadership deficit a couple of years back. There was a power struggle, and the CEO was shown the door. They brought in Harvey Schwartz, who I think is fantastic. Harvey was extremely senior at Goldman Sachs for many years. And he basically walked into One Vanderbilt, rolled up his sleeves, and I think has since put the ship back on course. What has to happen with this name and all of the publicly traded private equity names is there has to be exit liquidity again. So these companies have absolutely no problem raising money. Trillions of dollars are going into alternatives. The problem is, can you go public? Can you spin something out? Can you sell something? With the Fed cutting rates, I think that part of the story is going to come back. And that's really where I think most of these stocks are. They need there to be a door open in both directions. Capital coming in and then the ability to get capital out of a deal. We've only had one half of that equation for the last couple of years, and that is what I think is about to change. So I have a position here, believe in Harvey Schwartz, believe in the management, think the stock goes higher.
Jimmy, BlackRock, initiated overweight, Barclays, price target 985. Quote, clear industry leader in an already fragmented industry.
I think it's a pretty obvious call here. Not only an industry leader, but an industry leader in an industry where the assets on which they charge fees are going up. And at the current moment, it doesn't matter whether it's stocks, bonds, commodities, oil, et cetera. They are making money on more and more assets under management. It is the clear leader in an industry you want to be in.
All right.